It's great to have your company for the weekly this Friday, the 24th day of September. My name's Jessica Amir, a senior market analyst with Bell Direct. Well, it's been a pivotal time for markets, hasn't it? US and Aussie equities are down for the third straight week because investors are adjusting their portfolios for a brand new cycle. While we did start to see a bit of a pickup in equities in the last few sessions, thanks to China's biggest property developer coughing up their interest repayments, seeing iron ore stocks rejoice. Meanwhile, both central banks in the US and Australia reaffirmed that they'll be taking away the stimulus punch bowls, meaning they're stopping bond buying in each economies next year as expected. And markets like that, after all, no one likes unpleasant surprises. Now, we did see both central banks say that they expect the nations to strongly rebound and stand on their own 2 feet next year, with growth of 5.9% expected in the US and 4.5% expected in Australia. So once bond buying stops mid next year in the US and stops early next year in Australia, unofficial interest rates, bond yields will rise. But the real McCoy official interest rates are priced in to rise next year. Well, that's what the market's thinking anyway, late next year. Meaning investors will likely shift their portfolios again, favouring stocks that do better in high rate environments, like value stocks, banks and insurers, for example. And guess what? The financial sector is up 21% already this year on the back of the economic rebound from COVID-19. As for the local bourse this week, the ASX 200 fell about 0.5% from Monday to Thursday, while investors in utilities, energy and telcos were rewarded as they outperformed, while financials flounced, succumbing to end of quarter profit taking, as we usually see investors take profits from stocks that have done well in the quarter. So you could expect that to continue perhaps next week. So that's something to watch. Moving to the leaderboard, the ASX 200, the most upside this week has come from takeover talks, the oil price rally, and travelling kicking off at the end of the year. AusNet AST led the boards up 30% amid a takeover tussle. Beach Energy, BPT, and other oil stocks got a kick after the oil price rose to a 2-month high on tighter supply amid 2 hurricanes taking effect. And travel stocks like Corporate Travel Management, CTD, and Flight Centre, FLT, picked up, boosted by vaccination milestones being hit. And of course, Australia's Tourism Minister came out saying borders will be reopened by Christmas at the very latest. Also, keep in mind that Corporate Travel Management, CTD, their shares were upgraded by UBS in light of travel returning. As for what to watch next week, well, firstly, a huge focus will be on iron ore stocks, as some investors believe we've reached the bottom, while investment banks are cautiously upgrading the sector. So iron ore stocks will be a huge focus. The iron ore stocks, we know they're down heavily from their highs, like BHP and Rio Tinto. They're down 20%. And Fortescue Metals is down the most, 40%. But importantly, all iron ore stocks are rebounding. We know FMG hit $14.15. That was a year low, but then investors quickly took that as a buying opportunity and bought the dip. So why is the iron ore price down an ugly 50% from its high of $220? Well, firstly, China announced that it's aiming to curb carbon emissions and cut back on steel production. And secondly, what dominated headlines was this week was that there's concern about China's biggest property developer, Evergrande, potentially going broke. So going forward, keep an eye on the iron ore price, iron ore stocks and mining contractor stocks. Why? Well, they've bounced off a key support level from a technical perspective. Plus, there's also talk that China's government could step in and rescue the key property group. Secondly, also take note that investment banks like Citi are saying that China's lead indicators, well, they're stabilising and they've turned up from their recent lows. Now, Citi is forecasting the iron ore price to rebound to $125 US next year. But then Citi thinks the iron ore price will fall back in 2023 to about $80 US. So keep that in mind. Not only are investment banks bullish on iron ore rebounding, but several stocks were upgraded this week. Let's go through them. Macquarie upgraded Mineral Resources, MIN, as a buy, slapping an $80 price target on the miner. However, Macquarie says the most growth for MIN will probably come from its lithium projects. Macquarie came out reiterating BHP as a buy with a $56 target, and BHP announced a 30% reduction in emissions by 2030. And BHP also unveiled plans to be net zero by 2050. Don't forget that BHP is heavily invested in uranium, which will see increased demand following the Australian, UK and US's program to build nuclear-powered submarines in Adelaide. And we also know BHP is the biggest provider of uranium in Australia. So keep an eye on that. FMG was also reiterated as a bell potter buy with a $20 price target. Ords gave FMG a $26 target. Also recall that FMG is not just a one-trick pony either. FMG is investing and working toward generating hydrogen power. Plus, it's making its trucks electric in a bid to be carbon neutral by 2030. Citi also came out in the week increasing Champion Iron CIA's rating from a hold to a buy. That was another upgrade. And although Rio Tinto missed out on an upgrade this week, recall that Rio Tinto is not only in iron ore, but it's set to be one of the world's biggest lithium miners. As for what else to watch next week, it's always useful to look at the most traded stocks at Bell Direct to see where others find value for potential trading ideas. This week, the most buys on the platform were in the mining sector. BHP, Fortescue Metals and Rio Tinto saw the most buys, followed by nickel miner Western Areas, WSA, as the nickel price rebounded. Other stocks that saw a lot of buying in the building game, they were Boral BLD. Their shares rallied for the second week, bouncing off its 14-month low and attracted a lot of client attention. And finally, next week, there's plenty of economic updates to be across. All eyes will be on retail sales out Tuesday, and building permit data will be released on Thursday. That'll be an interesting health check. And that's the weekly. Don't forget to follow us on Twitter for news that you need to be across. If you've got any questions, please leave them on YouTube. From all of us here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. Bye for now.